Good afternoon, everyone. It is Tuesday, June 3rd, 2025. This is going to be the new pain trade for the summertime, and we'll get into what the stocks did today. But first, don't forget to give the video a thumbs up, like, comment, subscribe to the channel right there. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. We'll be doing a summer sale pretty soon, too, so stay tuned for that. Awesome stuff here, and should be a good summer for trading, and it's already been a good first half of the year. But anyways, let's get into it here. So one of the things that we talked about this morning in the short video pre-market, or not pre-market, but intraday, we talked about stocks up, yields up. And I did tweet about this as well earlier this morning, and I think that's going to be essentially something we're going to want to bookmark here, because I do think that will be a pain trade. And we've kind of talked about this over the last couple of weeks. I've mentioned it recently, like, yes, the 30-year has a very, very bullish pattern, and this will probably stick above 5% at some point, and maybe even the 10-year will, although it's it's a lot farther away. But again, one of the things I've talked about is how, again, it's never been the case that yields up means market down, right? It's never ever been that. It has been the case at times where that was kind of the current zeitgeist of the market, but it's never been like a one-to-one. Just like yields down doesn't always mean the market's pricing in like a crash in the economy, right? So it's never been like a positive. Bond market's very complicated. There's many things that can influence bond prices, and the ends of the curve matter too, right? The front end versus the long end. What I'm trying to say though is, I think yields can break out, and I don't think stocks will be that bothered. And part of the reason for that is, like what we've been talking about lately, really is just that this quarterly, OPEX cycle here, right? You have a lot of hedges being bought, panic hedges being bought into this sell-off in early April and late March. And when these guys hedge, they don't just hedge for a week out or a month out, which they did, and we talked about that as the thesis for this melt up, right? That definitely took place. And since then, we've just been consolidating sideways. We talked about how nice of a pattern this was on NQ. Look at that. I mean, that is textbook bull flagging. You even have a bull flag within a bull flag right here. Same thing really on ES. Nice pattern. RTY, right? Shakeout, boom, tight bull flag, right? Inverse head and shoulder setup. So good pattern here. And, we talk about how bears have to do what? They got time and they're running out of it. The shot clock's winding down really fast. Those hedges, right? The way that the way that the market works, again, it's not always about the macro, right? We know that. That's where the wall of worry comes from. Those hedges force market makers to short stock, right? When those hedges decay, guess what the market makers do? They buy back those short stock, which creates this upward pressure. And, again, that's why we can have all this negative data. That's why we can have yields going up. That's why we can have all these stagflation readings. That's why we can have a super hawkish Jerome Powell on May 5th or 6th, whenever it was. And we just like gap through, the next Monday, right? So it's important to understand that those dynamics here, the market's not always the economy. The market is positioning right before everything else. And I think that's going to be the pain trade. I think you're going to hear a lot of angst, a lot of, how can this happen? These people are idiots. Anybody who's buying this is an idiot. And it's not that people are buying it, it's that it's being bought back. Just because of forced positioning. And that's just kind of the thesis here. So right now, from a technical standpoint, I mean, we closed above. I thought we might see a retrace today. Honestly, I still have my long positions. Trading room, we have trailers and so on and so forth. And swing trades, we have a lot of longs out there. But I thought we would see a retrace today, and we just trended. So we just went up. We might see it tomorrow. We got ADP jobs. Now, jobs could cause some volatility, but again, I don't expect it to really do too much. So basically buy the dip. And same thing with jobs Friday. I would like to see a retrace. the more time we can, the larger of a base we can put in here, the better, the more juice you're going to get out of it. And, again, like I said a lot recently, this chart here, this whole setup reminds me a lot of 2023, right? Everybody talking about the gaps they have to fill, right? We have to fill the gaps, Aaron, they have to fill, no, they don't. And, we just went up. And then we just consolidated for a month, and then we just went higher. Well, gaps, gap, 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 gap. We've been consolidating for like 3 weeks now, right? I wouldn't mind seeing a little bit more of a pullback, and then, not even a pullback. I think that's kind of out of the question, but even just a dip, just for structure. I mean, it's not like I'm gonna get more long, but I think just for the structure purposes. So yeah, that's pretty much it here. SPY closed 50 cents above the previous local high. SPX closed 2 points above the previous local high, so technically it's a breakout. Again, why we could see a retrace is when that happens, a lot of people stop out, right? So a lot of people get their stop loss hit based on this close, and then when that happens, there's a lack of buyers left, and then it just retraces. So we'll see. Maybe we're vulnerable at ADP at 815 tomorrow, but I think it's SPY the dip no matter what. You're way outside of the range, so what's that, like 2% from all-time highs now? Let's see, 2.4. So 2.4%. IWM, it's this close to triggering an inverse head and shoulders. Just needs a close above 210. I would prefer to see it close above on the weekly, so Friday, because we could close above it on the daily, then reject. But weekly close above that triggers that. And what's that target? I'm not saying it goes this high. This is just what the chart says. I'm saying it can go this high. 170, right? About 210. See, that's 40 points. So you add that to the neckline. That's 250. It's an all-time high. I'm just saying that's what the measured move is. That's all, that's all I'm saying. So same thing with the Dow. Look at that. I mean, 366 to 428. That's 62, 490. I don't think we're going that high, but that's what the pattern is. SMH, again, same kind of, like you had that abandoned baby, right? So I kept this bull flag here, even though it was kind of like sloppy, because you got an abandoned baby, and then we gapped through it, higher low, and it's trying to break out now. AMD was pretty strong today. I noticed that curled up nicely. TSM, Broadcom, new all-time high, new all-time closing high. NVIDIA, still stuck at that 140 area though. IGV starting to break out. Very strong pattern here. Beautiful pullback, retest the low. And what else can you say? Look at that monthly. Look at that monthly chart. That's beautiful. All right, transports, they held up today. We talked about, there was a little concern yesterday morning with them in banks. We'll talk about in a second, but yeah, outside move up today, bull inside bar. Rates, again, bounced down a little bit today. I think TLT, finished down 15 cents. So a little gap in crap there. Didn't bother the market. XHB found support at our 92.50. All right, so that's been a spot for a while. Higher low there. Back above 97. Definitely firms this chart up a lot. And VNQ here, this is coiled nicely. It's getting ready. So that's hanging in there. XLF up 10 cents. Again, yesterday, a little concern, but bull flag. KRE, one day wonder, right? That's why we don't get too hung up. We just made note of the weakness yesterday. The only reason I made note of it is because I noticed that XHP and transports were down together, and that's not something we usually see. And it was on news too. But impulse higher today, no problem. KBE, same thing. Broker dealers, same thing. They're fine. Energy had a good move today. I was just talking about this to members. Again, 64, right? There's somebody desperately selling this. Look at what happens here. 423, so April 23rd, 64 bucks. We sold off down to the 5th of May. Almost a double bottom. So 423 to 521, that's a month. We sold off $4. Then again we hit 64 after 8 candles? So like a week and a half. And we sold off $1.50. 64 is, what I'm trying to say is 64 ain't holding for much longer. So whoever keeps selling this is having less and less reward. Path of least resistance is higher for oil. Next stop is in that 66, 67 area. XLE rallied with tech today. That's uncommon. XOP, nice outside move up. OYH got above the 50. We talked about that yesterday. Nat gas up 3 cents, nothing crazy there. Still has an inside bar. Uranium had some news today too. CEG, a gap and crap on the meta thing, but look, there was a lot of trap longs up here. As long as it like holds up, closes green on the week, I think it's fine. But just be careful with some of these others, like NNE, I think Aquila. These guys, they may be raising capital here, so long term, I don't think it'll affect them, but just short term, be aware. URNM back above the 200, so nice to see that. CCJ held most of the gains today. Dollar up 58 basis points, hung in there. Dollar yen was strong all day long. Gold, little retrace. Structurally, no problems. Silver inside hammer. Let's see pattern on this. See, because it's tried to consolidate at or above 35 a couple of times, and it's gotten rejected eventually. But we'll see about pattern here. What I like is, I talked about this yesterday. SIL up. That's good. PL held a trend line. It still needs to tighten up a lot though for me to get interested. And then palladium here up nicely today. Copper up 8 basis points, nothing terrible. Inside hammer. That looks a little bit, that actually looks bullish now. You got the inside bar. Good move yesterday. Retested the low, spiked the low today, and then closed back flat. That's not bearish. So finally I can actually say something about copper that like makes sense and isn't just neutrality. All right, Bitcoin. Again, hanging in there right on this 105-ish, 106 area. So breaking back above would be good. And I've just been kind of like neutral to positive on Bitcoin for a while. So, yeah, it was red yesterday or last week, but again, it's 7 in a row. So nothing really off there. For tomorrow, we can look at SPY here. A lot of interest at 600. Don't see any problems. And by the way, I talked about this earlier, but yeah, you can see, the positioning is pretty good. I talked about this morning, but this is the second time, maybe like the third time really, that we've seen somebody try to flash an iron condor on SPX, like the second or third time in the last like 3 weeks. They flashed this iron condor pre-market and they just got smoked. Like they just got destroyed. And we picked up on this because SPY and QQQ were pretty damn positive. Like that was not even a consideration based on this look, like at all. So a lot of people read gamma exposure. Say like maybe 2% of people actually know what the heck they're looking at. So we closed above the top end of that. They lost money on that. So might have been a little advertisement. we'll see. Anyway, we'll see what happens tomorrow. Maybe we get a, maybe we get a shakeout on ADP. Maybe not. Either way, I know it feels like we're overbought, but yeah, like on the 10-minute, we're overbought, but on the hourly, we just coiled for 2 weeks, 3 weeks, and we're ready to make a trend leg. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find me on carnivoretrades.com. Stay tuned for the sale. We'll be on deck pretty soon. I'll see you guys all tomorrow.